Monday, November 1st, 2021, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at counterparty risk and how that's such an important aspect of holding physical gold and silver outside the banking system. We're going to go through what counterparty risk really is and how it can affect one's portfolio and financial health. Before I start, though, just want to touch upon some great news for those of us who have been trying to expose the banking system, the bankers, the bullion banks in the LBMA or on the COMEX, the people who have been manipulating not just the gold price, but all the markets. You know, they are part of the central banking cabal. So what is the piece of good news? The piece of good news is that the CEO of Barclays, which is one of the too big to fail banks based in the UK. They used to be part of the LBMA, of course, but their CEO has had to resign. He stepped down because, well, he was friends with Mr. Epstein, Jeff Epstein, and the statement about his stepping down or resignation says that, it says here, the bank said in a statement on Monday morning, and I quote, "It should be noted that the investigation makes no findings that Mr. Staley saw or was aware of any of Mr. Epstein's alleged crimes," which was the central question underpinning Barclays' support for Mr. Staley following the arrest of Mr. Epstein in the summer of 2019. So why are they not supporting him now? Why has the board asked him to step down? If there's nothing there. And there's a very incriminating photograph here, and actually have to give the Telegraph credit for putting that photograph on this article. And this has just come out this morning. And it's him. He's the guy on the left next to Larry Summers, a former U.S. Treasury Secretary, a former, he was Secretary of the Treasury under Clinton, and he started a lot of the gold leasing program in the 90s. There's a lot of literature about that in the gada.org website. They've done a lot of research about that. So is it surprising that we've got one of the guys who started the gold rigging, how can I say, operations in the 90s next to a bullion banker who, and they're all friends with Epstein. And guess who's next to Epstein there on Epstein's left? Well, you know who that guy is. And but he's still around, right? And we're taking instructions. We're supposed to listen to him for what's been going on in the last 3 years. So this is good news. It would have been even better news if this guy had been maybe arrested by the police for questioning. Maybe that will happen. Who knows? So I think it's a great day for us who are trying to expose the fraudulent nature of the bankers and the banking system. So, and that gets me right back to counterparty risk. So counterparty risk, I'll give you an example of how it can affect you even if you think you're making a lot of fiat currency profits. I'm not going to say money anymore because real money, of course, are gold and silver. And you might say, what are you talking about? Well, JP Morgan, the JP Morgan, said in 1913, when asked in Congress, under oath, what was gold? And he said, well, gold is money, everything else is credit, right? So that's the key word there, credit. So whenever you have a position in stocks, whenever you have what you think is money in the bank, when you have a position in bonds, when you have an ETF, any kind of instrument that is with a financial institution on their books and you have an account with them, that's a credit risk. That your counterparty risk will be the broker, the bank holding those positions for you. They're liable. They hold, they've made the promise to you if you buy, let's say, a silver ETF or a gold ETF, that they're going to match the price of gold and silver. Some of them say that they're going to deliver you the gold and silver, but that's what counterparty risk is. It's when you give your asset or one of your assets, you convert it into currency and you put it in the bank. The bank becomes a counterparty to you. But when you're holding something like a silver coin or a silver bar or a gold coin, there is no counterparty risk because you're holding it. So is it any wonder that they've made everything electronic? They used to send people their share certificates for stocks of companies. So you had no counterparty risk if you were holding that. If a broker or a bank went bust, you didn't care. But nowadays, everything is held electronically. Yes, you might want to ask your broker to send you the certificate, the paper certificate. But I don't know how easy that is these days. So one example where counterparty risk was really important was in the '08 crisis, because the bankers, they always go on about that the derivatives bubble that we have, and we've had for probably 30 years now. It started growing in the late '80s. And by derivatives bubble, I mean the OTC derivatives. That's very opaque, and it's based on things that are not real, like the financial markets, really. They're bets on interest rates, bets on prices. They're just side bets, derivatives. The bankers and the market speculators, they usually leverage. They bet on margins. So if you bet on a future or a CDS, for example, credit default swap that they did on subprime mortgages, you will be able to control, let's say, $1 billion worth of bets with only 100 million. So there's a lot of leverage. And so the notional amount of all these bets are probably over $1,000 trillion. But what the bankers say is that, oh, it doesn't matter that it's that big, because one counterparty that's making a profit, that counterparty is getting credits from the one that's losing, so it nets out. But the problem is when you have a Lehman collapse, and nowadays, of course, we've got the Evergrande troubles hanging over not just the Chinese financial markets, the Chinese economy, but the whole world economy. We're talking 300 billion. We don't even know about the derivatives because they're off balance sheet as well. That's the other thing. So we could have trillions off balance sheet bets on Evergrande, who knows? But in '08, when Lehman collapsed, Lehman was counterparty to many of these derivatives. So when a counterparty fails, it's not able to pay its part of the deal with the other counterparty. So the other counterparty gets left holding the bag. And let's say Lehman sold Goldman Sachs a credit default swap for something, and Goldman Sachs was making billions on it. But if Lehman collapsed, Goldman Sachs wouldn't get anything. And the same thing happened with AIG, which is supposed to be an insurance company. They had a subsidiary or an arm called AIG Financial Products, and it was based in the city of London. Basically, they were the ones insuring a lot of these derivatives, and they went bust. And the U.S. Treasury, had to bail them out, because it would have probably brought down the whole insurance sector, because AIG was also liable for AIG financial products debts. So the U.S. Treasury, I think, had to bail them out to the tune of $160 billion. And Goldman Sachs had a huge bet through AIG financial products. So when the U.S. Treasury bailed AIG out, they were bailing out Goldman Sachs. So that's how counterparty risk works. And if you watch The Big Short, which I highly recommend, which is a movie all about the '08 crisis, you will see that at the end, Mark Baum, who was one of the guys who made a lot of fiat currency from the crisis, he wouldn't have gotten paid, even though his bets were the right way. They bet against the housing market, if the U.S. Treasury hadn't bailed out AIG, because the whole financial system would have imploded. And that's what I was betting on. At that time, I already had my physical gold and silver outside the system. So, yes, they bailed them out. But is it a reason to get out of gold and silver because they're going to bail them out again? Well, I would say that they've bailed them out again last year. And of course, they have a cover for that. We know what that is. I'm not going to mention it. But I think the next time they do it, they try to do it, it's not going to work out. And I think what we're seeing now with all the shortages, all the backwardation for commodities, all the rising prices, is the loss of confidence in these people, in the banking system, in the bankers, in the central banks, in the treasuries, in government. And when that happens, the whole financial system, everyone loses faith and confidence in the financial system, and counterparty risk becomes like irrelevant. Not that it won't matter, but it will matter, because the whole system will be a counterparty risk. And being outside the system will be the only thing that might save you. And why might? Well, because nothing is certain in life. Am I saying that gold and silver are not going to work? No, but by the time we get there, hopefully you'll be able to keep a hold of your gold and silver, because I think things are going to get very turbulent, not just financially, but economically, socially, politically. We're already seeing that. And with that, let's quickly look at where the markets are this morning. Here in the UK, our clocks went back yesterday, so right now it's 8:37 a.m. London time. I think the US hasn't changed its clocks yet, so we're only 4 hours ahead now of Eastern time. Usually we're 5 hours ahead. Where are we then in the markets? We've got spot gold, 1783. That's unchanged. High's been 1788. Low 1778. Silver is down 8 cents at 23.80. High has been 23.97. Low 23.73. The Dow future is up 120, or a third of a percent. The Nasdaq is up 55. S&P 500 is up 15, or a third. The FTSE is up 23 points. What about the currencies? So what about the currencies? Well, we got sterling down about 0.2% at 136.69. The euro is unchanged, 115.67. The dollar is up a third versus the yen at 114.40. The dollar is down 0.1 versus the yuan at 639.80. Aussie dollar is down 0.25% at 75. The dollar is unchanged versus the Canadian dollar at 123.87. And the Kiwi dollar is unchanged as well at 71.72. To the commodities, WTI crude is down 0.2% at 82.68. High-grade copper is down 0.5% at 423.30. Natural gas is up 0.25% at 5.44. So what about the bond market and specifically the Australian market? I made a video last week talking about the carnage that took place in the Aussie government bond market. Well, right now or today it's calmed down a bit. So the Australian 2-year yield has come off, which is actually a good thing. In the bond markets, when yields come off, it means prices go up. So it's down about 5 basis points. So for now, they've calmed that market down. So we're going to keep an eye on the Aussie bond market. There are other markets that are showing signs that yields are starting to go up, which means that interest rates will rise eventually, like the Canadian bond market, the European bond markets, even the UK bond markets. But right now, it seems to have calmed down. What about the US 10-year yields? The US 10-year yield is up 2.5 basis points at 1.58%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.